Petrofac isn't the kind of company you read about on the front page every day, but in the energy world it's a name that matters. They're not producing oil or gas themselves. Instead, they're the ones designing, building, and maintaining the infrastructure that makes the whole system run: the rigs, the refineries, the processing plants, and increasingly, the renewable projects that governments are so keen to roll out. It's a fascinating business because it sits at the intersection of old energy and new. On one hand, Petrofac has decades of engineering experience, nearly 8,000 employees across 30 countries, and billions of dollars worth of contracts in its backlog. On the other hand, the company has been battered by corruption scandals, heavy debt, and so many delays in its financial reporting that the London Stock Exchange suspended its shares. That doesn't happen to a company in good health. So, Petrofac becomes a perfect case study for us. When you break it down with a SWOT lens, strengths, weaknesses, opportunities, and threats, you see a company in transition, trying to survive its past while also betting on its future. And that's what we're going to dig into today. We'll unpack where its engineering depth still shines, where the financial cracks run deep, what opportunities the energy transition might offer, and what threats could push it over the edge. By the end, you'll see why Petrofac is both an intriguing and a risky story in today's market. First, let's look at the strengths of Petrofac. When you look at Petrofac from the outside, the first thing that stands out is its technical pedigree. This is a company that's been around since the early 80s. And over that time, it's built up a reputation for tackling some of the toughest engineering projects in the energy sector. They don't just design and build facilities, they also stay on to operate and maintain them, which means clients rely on them for the long haul. That creates sticky relationships. Once Petrofac is in, it tends to stay in. Another strength is scale. We're talking about nearly 8,000 employees working across 30 countries. That kind of footprint isn't easy to replicate. It means Petrofac can bid for projects in the Middle East one week and take on renewables in the North Sea the next. It gives them reach and flexibility that smaller firms simply don't have. Then there's the backlog. Billions of dollars worth of contracts are already secured. In practical terms, that's fuel in the tank. Even if new work slows, that backlog provides Petrofac with visibility of revenue and activity for months, sometimes years ahead. In a volatile industry like energy, where projects can be delayed or cancelled overnight, that certainty is a strength. We also shouldn't ignore the technology side. Petrofac has been pushing into digital solutions, things like digital twins and smarter maintenance systems. These aren't flashy headlines, but they matter because they improve efficiency, reduce downtime, and help Petrofac win tenders by showing it can deliver modern, cost-saving solutions. And finally, despite its troubles, Petrofac still carries a name that means something in energy circles. When a national oil company or a government looks for a contractor with experience, Petrofac is still on the shortlist. That brand equity, built over decades of execution in difficult environments, is a strength that money alone can't buy. Now, let's look at the weaknesses of Petrofac. Here's where the shine starts to wear off. Petrofac's weaknesses aren't small blemishes, they're deep cracks that have defined the company's story for the past few years. The most obvious one is the financial picture. Petrofac has been posting heavy losses. We're not talking about a bad quarter here and there, we're talking years of red ink. That's left the balance sheet stretched, with a debt pile that makes investors nervous and limits the company's ability to invest in growth. Then there's the business model itself. Petrofac relies on landing massive contracts. That looks great when a billion-dollar project is signed, but it cuts both ways. One delay, one miscalculation, or one client dispute, and suddenly margins vanish. It's a risky way to live. because the wins and the losses are both amplified. The reputation problem is another weakness, and it's not something that disappears quickly. In 2021, Petrofac admitted to bribery and paid heavy fines. Those kinds of scandals stick. In a market like the Middle East, where trust and relationships drive deals, having that stain on your name makes it harder to win business. Even if you've cleaned house, people remember. And let's not forget the operational side. Petrofac has struggled to even file its accounts on time, and that's led to trading suspensions on the London Stock Exchange. When a company can't get its financial reporting in order, it sends a terrible signal to the market. It says management is firefighting, not steering the ship. So, while Petrofac's strengths lie in engineering and history, its weaknesses are financial fragility, reputational baggage, and organizational missteps. And together, they've left the company teetering in a place where every new project feels like it could either save them or sink them. Now the opportunities for Petrofac. If we shift the lens to the future, Petrofac still has some cards it can play. The energy world is changing, and that actually works in their favor if they can adapt quickly enough. First, there's the global energy transition. Governments and companies everywhere are pouring money into renewables, offshore wind farms, hydrogen infrastructure, carbon capture projects. Petrofac's core skill is building and managing complex facilities. It doesn't really matter if that's an oil refinery or a hydrogen hub. The nuts and bolts of engineering are similar. That gives them a natural route into the green economy. Second, there's the backlog of contracts they've already secured. This is more than just a number in an investor presentation. It's work in hand. It's months of revenue that keeps the lights on. In an industry where order books can swing violently, having that backlog means Petrofac has breathing space to figure out its next move. Third, there's the restructuring itself. On the surface, it looks ugly debt being converted into equity, shareholders getting diluted, but the reality is that it can reset the balance sheet. Fresh funding and lower debt could give Petrofac the chance to stabilize, rebuild confidence, and actually start competing on a level footing again. And finally, there's geography. Petrofac has been strongest in the Middle East, but energy demand isn't slowing in Asia, Africa, or even in parts of Europe. Infrastructure is going to be built, and if Petrofac can position itself as the go-to contractor in emerging regions, it can carve out a new growth path. So the opportunity picture is clear. Petrofac can leverage its existing expertise into new energy markets, ride its backlog through the storm, and use restructuring as a painful but necessary reboot. If they play it right, the future doesn't have to look like the past. Of course, for every opportunity, there's a threat. And in Petrofac's case, those threats are serious. The most immediate one is shareholder dilution. Restructuring the balance sheet may help the company, but it comes at the cost of existing investors. When debt gets swapped into equity, or new shares are issued to raise cash, the value of what you already hold gets watered down. That's a tough pill to swallow, and it can keep the share price under pressure even if operations improve. Then there's the legal and reputational baggage. Corruption scandals don't fade quickly. Clients, banks, and even regulators remember, and that means Petrofac is constantly competing with one hand tied behind its back. A competitor without that history often looks like the safer bet, no matter how strong Petrofac's engineering skills are. Competition itself is a huge threat. Companies like Technip, Saipem, and Schlumberger are not just rivals, they're giants with more resources, stronger balance sheets, and cleaner reputations. When the big contracts go up for bid, Petrofac has to fight hard, and even then, it might not win. We also can't ignore volatility in the energy markets. If oil prices fall, upstream investment dries up, and the pipeline of projects shrinks. If prices surge, focus often shifts to producers and their margins, leaving contractors squeezed. Either way, Petrofac is exposed. And perhaps the greatest threat of all is failure of the restructuring. If the debt swap and funding plans don't go through smoothly, if lenders lose confidence, or if new problems emerge, Petrofac could be pushed into insolvency. That's not a far-fetched risk. It's the kind of cliff-edge companies in this situation really do face. So while the opportunities are real, the threats show just how narrow the path is. Petrofac has to execute almost perfectly to claw its way back. And in a business, this complex perfection is rare. In conclusion, where does all this leave Petrofac? On one side, you have a company with serious engineering chops, decades of experience, a global workforce, and a backlog of contracts that most rivals would envy. On the other side, you have a balance sheet under heavy strain, a reputation scarred by scandal, and a trading suspension that has locked investors out of the market. The opportunities are out there, the energy transition, the chance to rebuild through restructuring, and the possibility of regaining trust by delivering projects on time and on budget. But the threats are equally sharp: dilution, competition, volatility, and the risk that this restructuring simply isn't enough to keep the company afloat. In many ways, Petrofac is a case study in what happens when engineering excellence collides with financial and governance failure. It's proof that technical know-how alone isn't enough to guarantee survival in today's markets. You need trust, you need strong finances, and you need flawless execution. For investors, Petrofac is not a straightforward story of value or growth. It's a gamble, a bet on whether this company can reinvent itself fast enough to survive. If it does, the upside could be significant. If it doesn't, Petrofac will be remembered as another fallen name in the long list of contractors that built the energy world but couldn't build a future for themselves. And that's the SWOT on Petrofac, a company balanced on the edge between survival and failure, between the old energy world and the new.